Exciting news! The tax laws changed in 2025, and with change comes opportunity. But here's the truth. Most taxpayers won't even realize the IRS just gave them a chance to save more money. In today's video, I'll walk you through the new 2025 tax breaks and insider tips to make sure you don't leave money on the table. Stick around because by the end, you'll know exactly how to protect your income and maximize your refund. Why this matters. Every dollar counts, especially when prices are high and the cost of living keeps climbing. Taxes are usually one of the biggest expenses families face, often more than food, healthcare, or even housing. That's why these 2025 changes are such a big deal. The IRS adjusts tax brackets, credits, and deductions almost every year, but this year includes bigger shifts than usual. Knowing these changes isn't just about filing correctly. It's about planning ahead so you can keep more of your hard-earned money instead of handing it over to the IRS. Who benefits? These new breaks help almost everyone. Employees who rely on W-2s, self-employed freelancers hustling on 1099 income, parents raising children, and small business owners with major expenses. Even retirees benefit from higher contribution and withdrawal adjustments. No matter your situation, there's at least one change here that could directly lower your tax bill or increase your refund. Tip number 1. Bigger standard deduction. Let's start with the most common break. The standard deduction. For 2025, the IRS increased it again. That means you get to shield more of your income from taxes, even if you don't itemize. For single filers, the deduction went up by several $100s. For married couples filing jointly, it's nearly double that. Translation: you keep more money automatically, with no extra paperwork. For example, a married couple who earned $80,000 in 2025 could now see several $100s in savings simply because the standard deduction is higher. Tip number 2. Expanded child tax credit. Parents, listen up. The child tax credit is larger in 2025, giving families more money back at tax time. For example, a family with 2 children could now receive up to $4,000 in credits, compared to last year's $3,600. Even if you don't owe taxes, the refundable portion of the credit could still put cash directly in your pocket. This is money you don't want to miss. But here's the catch. Your eligibility depends on your income level. Families with higher incomes may see their credit phase out, while middle and lower income families benefit the most. Tip number 3. Higher retirement contribution limits. One of the smartest tax moves is investing in your retirement. For 2025, the IRS raised the annual contribution limits for 401ks, IRAs, and other retirement accounts. That means you can contribute more, lower your taxable income, and save for the future all at once. For example, if you contribute $20,000 to a 401k, you've just reduced your taxable income by that same amount. And if you're 50 or older, catch-up contributions allow you to save even more. It's a double win. Less owed to the IRS today, more money for you in retirement. Tip number 4. SALT deduction. Cap raised. Homeowners in high-tax states will appreciate this one. The state and local tax deduction cap, also called SALT, has been raised for 2025. This allows you to deduct more of what you pay in property taxes and state income taxes. For families in states like New York, New Jersey, or California, this can easily mean thousands of dollars in additional write-offs. While not every taxpayer will benefit, if you own a home and your property taxes are high, you should take a close look at this deduction. Tip number 5. Energy efficiency and EV credits. Energy efficiency continues to pay off. Tax credits are available for homeowners who install solar panels, upgrade insulation, or replace older appliances with energy-efficient models. For example, upgrading your HVAC system could qualify you for a credit worth hundreds of dollars. And if you purchase an electric vehicle in 2025, you may qualify for a generous federal credit. These incentives not only lower your tax bill, but also reduce your energy costs long-term. It's one of the rare tax breaks that saves you money twice, now and later. Tip number 6. Self-employment write-offs. Self-employed individuals still get some of the most valuable tax breaks available. You can deduct home office expenses, health insurance premiums, and even half of your self-employment tax. If you drive for work, the IRS mileage deduction for 2025 has been adjusted upward, which means more savings per mile driven. For example, if you drive 10,000 miles for business in a year, that deduction alone could save you over $6,000 in taxable income. The key here is good record keeping. The more organized your receipts and logs, the more you'll save. Insider strategy, estimated payments. Here's an insider strategy. If your income isn't consistent, don't wait until April to pay. Use quarterly estimated tax payments. They not only prevent IRS penalties, but also let you take advantage of deductions throughout the year. For freelancers and business owners, this keeps you in control. For example, if you expect to owe $12,000 in taxes, paying $3,000 quarterly avoids penalties and makes tax season far less stressful. Remember, the IRS charges interest and penalties on late payments, so being proactive saves you both money and headaches. Common pitfalls to avoid. The biggest mistake taxpayers make isn't misfiling. It's ignoring IRS letters. If you qualify for these breaks but don't file correctly, or if you skip estimated payments, you'll get notices. And if you don't respond, the penalties add up quickly. Another pitfall is assuming last year's deductions still apply. The tax code changes constantly, and deductions you claimed in 2024 may not be available in 2025. That's why reviewing the rules every year is essential. Bonus: planning ahead. Here's a bonus insider tip. Don't wait until tax season to look for savings. Plan throughout the year. Keep track of receipts, document your mileage, and note any major life changes, like getting married, having children, or starting a side business. All of these can impact your taxes. The earlier you plan, the easier it is to take advantage of these breaks. For example, contributing to an IRA in January, instead of waiting until April, lets your money grow tax-free for several extra months. Little moves like that add up over time. Let's recap. In 2025, you can save money through higher standard deductions, a larger child tax credit, increased retirement contribution limits, higher SALT caps, energy credits, and self-employment write-offs. Add to that insider strategies like estimated payments and early planning, and you've got a powerful toolkit for lowering your tax bill. Remember, tax savings don't happen by accident. They happen when you understand the rules and take advantage of them. If you're ready to maximize your refund and stay ahead of the IRS, reach out to Fenton Tax Help. We've helped clients resolve complex IRS issues, reduce penalties, and save thousands of dollars each year. And now we want to help you. Don't wait until it's too late. Take action today. Thanks for watching. Don't forget to like, subscribe, and comment below with your questions. Every week, we share practical tax tips to help you save more and stress less. I'm here to make the IRS less intimidating and your finances more rewarding. Until next time, take control of your money and keep more of what you earn.